The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. A little cold this morning in North Carolina. Hope you guys are doing well. A lot of earnings out. We're going to talk about those, but we're going to take a look at the Japanese yen first. So I've been a huge fan of trying to buy the dollar on a dip, try to buy the Japanese yen on a dip here. Never quite got exactly too close down here to 111.67.68 on the weekly. Back the truck up area, but the dollar got into that area that we wanted it to get into, bounced pretty good, and the yen was kind of leading that notion a little earlier, getting back into the balanced area here. This is the daily on the yen, and then kind of retesting it here as the dollar was looking a little bit weaker, trying to get in those weekly on for lows. So the yen, kind of that relativity stronger type trade, has now reached some targets initially here. We've got 115, let's just call it 115 even. We've reached a high of 115.30, 31. Let's take a look at the dollar. That's your targets right now on the yen, but let's take a look at the dollar really quick. And as we go into the futures server here, that e-signal is so nice to charge us a ton of money for. This is the dollar, and this was kind of that yen relativity situation. So we had a trading opportunity here. The yen was showing a little bit more strength, and had shown some nice technical situations to get into that trade, and more importantly, play defense, as we always talk about. But got a decent bounce in the dollar here. So the yen is at its target. The dollar, guess what, is at its initial target. There it is. As you can see, 178. We talked about that yesterday. Hit it, backed off, kind of crowding it again. So do I think the dollar is going to go higher? Yes, I do. But you should be taking some off the table here based on at least getting a nice, not going to call it free trade because they're all painful at some point. But, it worked out. So got some targets here. 1,000 points of light, stay the course. I'm just kidding. So we've got, I think, a chance to go higher. But again, the yen and the dollar are at its first resistance areas. And you should be able to take something off at this point. All right, let's see. Are you guys seeing charts? I hope you are. Okay. We seeing charts? Okay, great. I think we're having some issues at TFNN this morning. I was just checking to make sure. All right. So I've got the warmer. Yeah, somebody was asking about if it's sub-zero here. No, but it's cold for around these parts. The crude trade, not a massive bounce, but I think we did get into the 54-ish area yesterday. So we talked about playing defense below 52.32. It's kind of cool that this thing is showing itself as the dollar's kind of bouncing, also showing strength. I like this crude trade long. Still, I still like 54.46 as the first place to take some weight off here. Again, it was a nice little risk reward setup. I like to look at more longer term setups to try to, get a little heavier with than trying to do these ricochet intraday situations a lot. So, and I like to do a lot of these plays with options, as you know. But gold was, showing, I think, relativity towards the dollar, and now it's really showing itself and raising its hand that we could have shorted some things off that 1211 area. We haven't quite reached the targets on the downside, but we're getting close. Gold is kind of crazy sometimes. You might want to start thinking, well, we reached a low of what? 1180 and a half. Those unfair lows are 1177. I think you should start scaling out of this short. This was a nice, and we talked about, what's the best trade on the books right now. I was pointing towards, the yen, the yen long, the gold short. Crude's not the best trade on the books, but we're talking about that long. And these are all based on profiles, and just kind of being able to look around a little bit and try to get some extra information, not just technically relative to the instrument itself, but some other technicals that are going on to some products that actually have some relevance to what gold may do. You've got the market busting through the highs at the same time, the broad stock market and the dollar kind of sitting on at least of a trade and bounce support, and gold started showing itself early. So it was interesting, that when these setups happen, you can, again, it's about position sizing too. Like, where do you have more edge? You go in the casino, you play 21, you bet the same way, they will take your money. It's a statistical fact. So when you have some things lining up a little bit more in your favor and you gain a little bit more edge than 50-50, a lot of times you can kind of look at, the risk reward scenario. If it's a decent situation, go a little heavier, play around with the tightening of the stops, whatever. And that's kind of how I look at things. Let's take a look at and again, these are based on longer term setups that I look at. I think Steve Rhodes yesterday we were talking about using the short term breadth in the scanner on the internals of the S&P 500, and also be able to look at those inflection points on the 60-minute index chart or S&P futures chart like we showed on eSignal, trying to gain an edge there on a shorter term basis. Those are extremely valid situations. But a lot of times we'll show longer term setups on here. I'll stop talking now. All right, so CSI 300, this was another one we were talking about, was a really good trade on the books here to try to catch a bounce. I loved, this thing reversing here. We've reached some short-term targets here, the top of the mountain on the wide profile on the CSI 300 at around 33.96, and we've hit, let's see what that says, 33.96. Wow. Okay, so we've hit it. We backed off a little bit here, and should be able to take some weight off the Shanghai here and possibly turn this into a little bit of a free trade if we go higher. And if we come back, I actually feel like we're going to go higher, but it's a good idea to just take some off the table right here. Let's take a look at the VIX. And when people start talking, I love when people jump on the bandwagon late. Those guys on CNBC, they kind of huddle after the market. I think those options guys, the Nigerian brothers, we'll talk about that a little bit more when we come back and what they were saying about the VIX and what my opinion is.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And we were talking about the VIX before we went to break, and I was talking about listening to some of the things. I rarely listen to CNBC, but just for entertainment purposes, I was listening to it yesterday to try to fade some of the things that some of those guys talk about, which is always a good trade in itself. But those guys were, oh God, the VIX is going to be at 8 now. So why didn't they say that earlier? But anyway, a lot of people are jumping on the bandwagon that somehow, the regulation, the decoupling, I guess, and some other things, taking care of some agreements that weren't exactly in our favor, whatever. I mean, now the sun's going to shine brighter all the time, and don't worry about anything. I really don't agree with that at all. I think when you got a volatility contraction like this, there's a lot of things in play here, and one of the, you listen to that. The former president of Mexico, that doesn't seem to ever make any sense to me. I mean, some of these decoupling type things that are going on. I mean, there's going to be some volatility coming. You don't know when it's going to happen. I mean, you're talking about countries getting pissed off at each other, basically, is what's going on here, possibly. And then, God knows what kind of mechanisms. I mean, you look at some of these car makers. I mean, Ford, for instance, is a $12 stock, but I mean, these guys don't have any idea, seemingly, what could happen here for their future. I mean, and then a lot of, individual sectors could be affected just dramatically all of a sudden. I mean, markets don't like that type of, not knowing type of attitude. I mean, you're talking about, taxing goods coming in now. I don't know if a lot of those things will actually get through Congress. But, these are, how do you forecast earnings based on things that you don't really know what the landscape's going to be? I will say this, Trump comes from the business world, so I'm assuming he doesn't want to disturb things too dramatically. But, this VIX being down here, people are getting way, way too happy about things, and the fear's not there. Just keep it in mind. Also, something else, we were talking about, a lot of times I'll say, gold sometimes just makes a move the wrong way before it makes a move the right way. That sometimes happens with the S&Ps. I talked about unloading some lottery tickets up top here and just leaving some puts on. This thing's kind of spinning around here after the launch up on the S&Ps. That's usually a continuation pattern, but with the VIX as low as it is, I don't exactly know if this thing's going to continue to follow through. And when we were looking at the breadth situation, we're still extremely positive on the long term, but there have been some trading opportunities looking at the short term numbers relative to some of the index values on the shorter term, like Steve Rhodes was pointing out yesterday. So keep your eye on what the internals of the market is doing right now, and we could come back and retest this 2277 bare minimum where we broke out. That would be kind of I guess the word I'm looking for is it will test some mental fortitude, put it that way, for longs. Let's see here. Let's take a look at Starbucks. What was the they were saying that people were going into Starbucks and saying the place was too crowded to stay there and buy something. I mean, if the place is too crowded, that really, I can't really take that as a really bad thing, because that means Starbucks is full and people are actually ordering stuff. But anyway, we've got a pullback this morning. It looks like we're printing about 56.15. So we are below here. We're right in here, actually right down in here. The inflection points to pay attention on the Starbucks, 55.28. That would probably be a little bit of an area to have a possible trading opportunity, but any rallies back into 57.40 might need to be sold here. But right now we're just kind of in the middle of a fair auction. Why does that do that every time? Hold on. There we go. So that's the weekly view. I was showing you the daily view. If 55.28 breaks and we need to close below there, we could see 52.58 on Starbucks, which is down here. And I was forced to buy an expensive cup of coffee this morning by a friend of mine. Here we go. Let's hit the currencies really quick. We looked at the yen earlier. Let's take a look at the British pound. Okay, so I think you still got to wait for a weekly close on the pound. Today's Friday, obviously. We're sitting right at 125.39. That's kind of a wait and see, in my opinion. The euro pretty much came off that 108 area that we were talking about. Didn't quite get there, but this is, again, I think the eternal short. So I'm always looking for areas to sell that instead of buy it. I just don't feel good about buying the euro ever. Here we go. Let's pull up some stocks that are in the news here. Earnings related. Caterpillar, CAT. Here we go. All right, real print looks like 97, that neighborhood here. So here's the weekly. Kind of already played around with this fair auction here. Let's take a look at the daily. All right, so I don't know if you have a lot of edge here. I'm not a huge fan of buying Caterpillar, continuing to buy Caterpillar here. Let's take a look at Dow Chemical. Here we go. Let's see, Dow. Real print around 62. All right, so again, when this happens, this profile appearing below price action, if you're looking at the scanner, looking at your favorite stocks, or looking at stocks, that are in an uptrend relative to profiles or a strong uptrend, these are ones you don't short at bare minimum. But what do you do with it now? There's nothing to hang on to up here. You got to wait for new information on Dow. Let's take a look at Intel right after we get back from the break. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, back here. I was just looking at gold again. Gold's kind of rallying here. That's when you get, these inflection points are great areas to be aware of, but like we talked about earlier, actually maybe on the first segment, when the longer term inflection points is kind of what I like to look at for really more powerful setups than the shorter term. And therefore, you got to give yourself a little bit of noise area around some of these longer term inflection points. It's not going to be like some magical to the tick thing all the time. Just like it was really, really interesting watching gold. I said, I'd love to see this thing kind of get above and then reverse down back into the profile. And if you'll notice that inflection point was just kind of a spinning around area of just both sides of the fence, but that dollar really started giving you some relevance there. So, first stop down, it's, we talked about when it gets in the neighborhood. So this is a good example of it, and gold's kind of bouncing up now. So just be aware of it. I wake up every morning and just look at gold. That's like the first thing I look at after there's one thing I do before I look at gold. I usually wake up screaming in terror, and then I look at gold. But that's something I always take a look at. Let's take a look at the XLF. And, we closed above the other day, and then we look at this. And this is another good example of trying to wait patiently. Sometimes you have to sell things lower if you're going to sell them or short them in this case. So again, we closed above, and then we kind of retested, and we never really started migrating back down below 2360. So that was kind of that gold concept that never got you in the trade again on the short side. So, and now we're back up into 2387. Let's take a look at the XLE really quick. We're going to take look at a couple more stocks here. So it was kind of cool that the XLE at the same time, we kind of said, again, a relevant situation that gold looked like it might be in kind of a pop mode, or excuse me, crude. And we had this profile up here below price action, and now the XLE kind of popped. This is the weekly. We also talked about some stocks within the XLE. Let's take a look at SWN. Haven't quite broken above that 990. Just to kind of, and here's the weekly on XWN. I'd like to see a weekly close above 990, and then I think we could actually trade back up into 1124 on SWN. Let's take a look at ExxonMobil. Very small market capitalization here in this little stock. All right, so I kind of like this one for a pop too. I like it up into 86, 85. I like being able to play defense below 85.12. That's kind of where I'm at on ExxonMobil. A couple other stocks in the news here. JetBlue. We're going to take a look at Love in a second also. Okay, so some volatility here, and we've kind of settled. Looks like we're printing 21 this morning. Okay, so JetBlue, 2040 weekly unfair lows, and daily unfair lows 2088. You got a little bit of a trading opportunity here. I think if you could play some defense below 2088, 2040, might get a little bit of a pop here on JetBlue. Let's take a look at LUV and some other airlines. That's it. I think JetBlue could have some follow through here. Let's take a or not follow through, but a bounce here. United Airlines, let's see, 75.68. Looks like we are printing this morning. Today is the 27th. Yes. Nice little situation there, but would like to see a daily close above 76.05. I don't think this is something to mess with yet. Oh, we were going to look at Intel. Sorry about that. And David, I just saw your comment there, so apologize for that. Intel. Looks like we are printing about 37.71 here. So Intel still, I mean, you got massive support. This is, massive support at 37.09 on this stock. Not something to be shorting, in my opinion. Let's take a look at Microsoft. All right, so prints 65.15. And Microsoft, we really talked about just completely throwing this out of the basket of anything to short. And we're sitting around weekly up for highs. And this is a strong stock in a market that was going sideways, just continuing to show strength all the time. And I can't understand. Okay, now we got it. Still a big fan of Microsoft. We've been talking about this for a long time, just as an investment grade situation. Not even Joey and I were talking about this. This is something you just don't look at. Let it do its thing. If you kind of have any pullbacks on support, add up. And that's been a nice little situation on Microsoft. Little known tech company. Let's take a look at Celgene. Okay, just watching the clock here. All right, so some earnings related action here. 112.83 looks like we're getting a print this morning. So trading up slightly since yesterday's close. But here's the situation on Celgene. I don't see that as a great trading opportunity yet. Let's take a look at Bristol Myers. All right, these are earnings related. 47.05. Yeah, this is phew. It's not on sale yet. It's not on sale yet. Don't have a lot of ways to play defense on that one. Let's take a look at Comcast. They need to change their symbol. CMCSA. Can somebody write the company? Anyway, another stock, strong stock ahead of times and spinning around above profiles, and then you get the launch. But again, I'm not a huge fan of trading before earnings. What do you do with it now? We're going to talk about this when we come back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. And I think we're honored. I think we have Dave White. Dave, you there?
Yes, I am here.
Well, thank goodness.
And I wanted to talk a little bit about tech earnings this morning because, I mean, you have your own programmers, you do programming, so you're kind of more in tune with maybe Microsoft than a lot of other traders would be. And
yeah,
you don't use a lot of Microsoft products, I don't know, but I'm guessing in your development, but you do develop for them.
Yeah, they've really had some great new. That's why I've been talking about it for a while, just from an investment grade situation, because the more I look at around and we do integrations for different software products, and I'm just thinking, man, they are just creating almost a one-stop shopping situation. And go ahead. Sorry.
Yeah, I was just going to say there's an old theory I have that comes from the company I was in that blew up, mostly because the CEO in a power struggle was the CFO, really. It became the CEO, and everything went downhill from there. We kind of had Ballmer just really doing nothing but making sure nothing bad happened, which meant that nothing good happened for almost, 13 years, 14 years? Mm-hmm. And, finally, when they got out of the way, they got somebody that understood the principles of big movement in technology with Satya Nadella. I thought maybe he wasn't the best guy out of the three that they were looking at. Mm-hmm. And frankly, the guy that was probably a little better than him went off to venture capitalists, making more money than him with a whole lot less work. So, right. You still think, well, maybe this is the best guy. It may have been even better with somebody else. There was a lot of backlog of just really bad ideas that kind of all got flushed down the toilet, killed, and they decided to go with a strategy they call Microsoft Everywhere, right? Yeah. Which is, I don't care if it's Unix, which now you can get .NET framework and all their code, and it's all open sourced for Unix or Macintosh or a lot of other stuff. So they're not stuck on just their flavor of languages and pushing you into the stuff anymore. They're actually fairly wide open. In fact, the new version of their development software literally, I think, has every major programming language in it now.
Yeah, Dave, we've been working with Microsoft Dynamic type integrations. It's amazing. Like you said, everything you just said was so true. And God, how do you? I'm concerned in general because like they just have made a push to, like you said, be very open about things. And what large company is not going to hear the word Microsoft and have all these things available to them and say, yeah, I'm in.
Well, a lot of people have to think that because I'm consulting for somebody right now, and they really hadn't thought about it. But if you're Facebook and you got 1 billion users, you want to use everything that's free. You use Unix, use databases that are free, and maybe you throw some shekels to Red Hat to develop maybe some of the pieces that are missing that you need. But if you hire 1,000 programmers, it's no big deal. So, if you got 1 billion customers, it's one thing. But if you're a Fortune 500 company and you're making a database or some other line of business application for 5,000 people that work in your company, then you can't afford to hire 1,000 people to basically do something that's a lot harder. You want to spend more money on your tools and less money on your programmers.
Right.
Where Facebook is just the opposite. They'll spend lots of money on programmers because it amortizes out to billions of particular users. But business, if they're writing something for internal use, it's not 1 billion customers. So Microsoft has really put itself toward making software very quick, very fast, and going back to its roots that it's always known, which is 80% of its revenue is going to come from business.
Right. No, I agree. It's amazing how much the Web 3.0 world is kind of built out too now. I don't know how much your feelings on this, but man, every time I think of something unique that I think is in my mind or something that the programmers can do or whatever, I kind of get online now and I look around. There's like 100 companies that have somehow repackaged the idea or made it integratable with something else, and it's like, wow, why even do the work? Because the cost, it's already, a lot of these things are already done now.
They're either done in free frameworks or, in fact, I'm sure you've been around long enough that if you wanted an answer, maybe you went on a bulletin board, maybe someone came out. Now there's maybe 5 different websites that have programmers on it all day long, and if you need to look at something, it's, you just Google it and you probably found it and you found the answer and you move on.
Yeah.
So there is a lot of stuff that you've kind of made a level for it, but it doesn't matter whether you're using some Unix box to serve your stuff or a Microsoft box somewhere with, Windows Server now, I think is what it's called. Mm-hmm. But, if you need Windows stuff, it's probably about how quick you can do it, not how cheaply, and how well it scales. So if you're only scaling, 5,000 users, 10,000 users, maybe 20,000 users, and you need it in a hurry, Microsoft's much faster and much cheaper. You're just spending more money on the tools than programmers. You get to Facebook, it's spending a lot of money on programmers and almost nothing on your servers and server software and everything else. It's how cheap can you put it out at scale. In business, it's how fast you can get it out and without spending a lot of money on programmers. And so all that stuff done for you is a huge advantage, and pretty much why I use Microsoft stuff to program in. I'm a single guy. I don't have a fleet of programmers behind me. Just about anything I want to do is in some framework or some new technology that you add or something else. So a lot of people kind of think of Microsoft and go, well, they're not Facebook. They're not this. They're not that. And they haven't even got into the first dollar of taking LinkedIn and putting it together with the rest of their stuff for business, which is their big master plan coming up. So I don't know if there's a whole lot of money left in the upside in Microsoft, but it's kind of hard for me to either short Microsoft or Boeing or anybody that's a leader in their field. Generally, isn't it better to go after the one that maybe is a little slower? Maybe its future isn't as clear.
Yeah.
As something like that. I mean, if the EU busts up, do you want to be an Airbus?
Yeah, exactly. Exactly.
I mean, you want to talk about a food fight. Well, what happens when England and France and the rest of Europe all get into a food fight over who owns what part of Airbus?
I know. Well, hey, Mick, can you stay on?
Yeah.
Okay, cool. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We've got Dave White with us. Dave, you still there?
Yes, I am. The only reason I wanted to kind of talk about tech earnings a little bit is I'm starting to see some dark clouds, not on Intel or Microsoft or the big ones, but even just if we look at the SOXL. You know, the last time we were up here yesterday, I'm probably going to have 20 or 30 in my newsletter of stocks that have tested previous highs with very slight volume. The 28th, you had 536,000 shares in the SOXL, and yesterday you had 333,000. So I've got some other ones out here. I mean, they're not just in that sector. If you look at Visa yesterday, 17 million shares on the last high, 9 million shares yesterday. Now, all these have earnings coming out in the next few days. So I'm not going to get, like you said, I'm not going to stand in front of the train here before it. But, you know, the last 3, 4, 5 days, there was nothing. But we got, you know, this is kind of where you separate the wheat from the chaff. On technology, I just don't understand maybe trying to short Intel, where everything's going to the cloud. They own 98% of the server market.
Incredible.
With their Xenon processors. If everything's going to the cloud, aren't they? Maybe it's all in there, but isn't it kind of silly to think that they're going to be, you know, halved? I think a lot of people like Intel, they go, you know, PC sales are not great. Wow, that's going to really hurt them. Well, for every Xenon processor, they can sell 20 regular dual core processors and make the same amount of money.
Yeah.
So a lot of these things, fundamentals, maybe the books and the numbers at the bottom don't matter as much in the stock market. But I think if you just kind of put a bigger picture on these things, you understand just a little bit about what these folks do. I think it's a lot clearer to figure out that maybe a company like Intel, as long as everything's going to the cloud, it probably ain't going down. Maybe it's not going up, but probably not going down. It's like trying to short Boeing, which always killed me because, well, they lost a bunch of sales. Well, even if they lost half their sales, it'll still be 4 years before they actually get the planes that they have going out the door. And by then, maybe the economy's come back around. So I just don't see some of these guys that are literally monopolies, almost monopolies. Intel certainly, Boeing a little less so, but really it's a duopoly, isn't it? Just them and Airbus.
Yeah.
So it's got to be two of these. I don't understand going after, some of these stocks will pull back. I wanted to talk about Google a little bit too, because there's I said it on my show yesterday. If there was one stock that looked like it was going to pull back on earnings, I think it was down 20 or 30 bucks last night. May not be down that much this morning, but I think 44 out of 45 of the analysts were strong buy. Eventually, you run out of people on the other side to buy, right?
Right. Well, no, like you said before, when the market moves, they said something really important a couple of minutes ago. When the market makes a move like this, it's a clarifying event to really find out some things that you might be able to take advantage of that are kind of like anomalies going on with the market in general on some individual stocks. And do you see anything in particular? We got about 30 seconds left here
I was going to say that normally I look for a lot of stocks that either highs with lighter volume or lows with lighter volume because that's the easiest signal. It's not tough to see. And I've had nothing. In fact, I didn't even put any charts in my newsletter yesterday. Guess what? I got like 40 of them here this morning.
Okay,
so
great.
There are stocks out here on light volume.
Awesome. Well, Dave, thanks for coming on. And guys, stay tuned for Larry and all the other hosts on TFNN. We'll see you again Monday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.